Well, it is 8:09, 48 seconds on the 14th of December. At work all day today. I saw gold during my lunch break. This is a 5-minute chart for gold. My lunch break's between 12:45 and 1:30. You can see gold sold off like 15, 18 points. And I saw it right here at this little high at like 125. It just happened to be the exact 50% retracement from the morning high to that low. And I was considering taking a little short right there, but I had no predictive value because I had no momentum change and I only had one reason to trade, which is the fib level, and I just didn't take it on. But you can see we're down almost exactly $65 right there. It's not a what if or a regret that I have, because I just like predictive value with RSI and changes of momentum, which is a leading indicator for a price reversal, and I look for probable price reversals where they can be expected. For example, this is the S&P 5-minute chart. You can see we have a little uptrend right here to this point, and there's a 1% divergence. But if we switch down to the lower time frame, you can see there's more structure now in the chart. We have second test, third test. We have a series of higher highs in price, and in RSI you can just see there's a series of lower lows, and the divergence is minus 5%, so we dropped from like 70 down to 65%. And my backtesting shows that 5% is the magic number to give a high probability for a price reversal. But here we don't have a level where we expect a price reversal, and we're not on the upward trend line. And I actually didn't see this entry point till right here, and I had another entry point with the break of the trend channel at the third contact. See, look, 1, 2, 3, and I've got John on Day Trading Radio breaking down this market structure, and he circled that high right there, but he didn't have a technical reason for why that might be a high, and I can't remember why he put a box around that. But you can see the third contact to a trend line, 1, 2, 3. He's boxed that as it's set up, and bearing in mind we're off 10 points from this high down to this low, and even right here at this third test, we're off like 5 points, and you can see the market really pushed back 3 or 4 points right there. So I'm not really focusing on the market because I'm basically following the chat in Hong Kong, and we're discussing gold. And this evening I'm not actually that motivated to get some trades on, only because it's been such a heavy day, and I'm not willing to take on any counter trend trades, and there hasn't really been any good divergences on key areas where price reversals can be expected. And all the same, if we look at the 5-minute chart zoomed out, we've had a big push down, so joining the trend lower right here could have been an option. And I've marked this level right here as a line. Let me zoom out. I haven't actually noticed why I've got that support or resistance level right there. So if I zoom out, oh yeah, so if you can see this low here from yesterday, that low comes in right here. So that's a bit of a classic re-entry. So where the market dropped down and found support, it bounced off that, it broke the support, and it came back, and that support almost acted as nice resistance. So if we zoom in, you can see that yesterday's low broke, and then we tested it as resistance, and so we got resistance right here, and we have a trend channel here, and we have a bearish 5% RSI divergence. So you can see, had you been using the 1 and the 5-minute chart across a wider time frame, there was some predictive value had I been focusing for a short entry right there at that little high at 635. So that's kind of how I trade. I look for predictive value with market structure and changes of momentum. I just got to focus and spot it. But you can see for me, only one signal to take on a trade is not good. I like 3 signals, if that makes any sense at all.